Okay, guys, it's been a while. So I came across this article yesterday only, if I'm not wrong, which talks about unsold supply hitting a 15-year low, which in turn will help to support the prices in 2023. Why? Because there's a lot of people still believing that the real estate market here will behave like the stock market generally lah. I mean, maybe not really for the Singapore one, because after all the SGX market is still rather tame, but maybe you're looking at the US side, because we've been seeing quite a lot of tech crashes, right? And so for those people who have been waiting for price to crash, so these are some of the reasons why developers would be reluctant to let go at either a fire sale or to sell cheap, especially those of them who have a lot of time to finish selling. So I'm not gonna go through the whole article, and I'm just gonna highlight some parts of it, or rather quite a lot of parts of it lah. So today's sharing will just be a little bit more of this article and a little bit more. And then back to this article, we've observed that there are 9 straight quarters resulting in a 15-year low. Okay, when it comes to the stock of unsold private housing, because all these ultimately, if you have a lot of supply in the unsold market, then naturally buyers will have a lot more selection and choices, which means that there's going to be less demand for resale. But the thing is, when you have a low for the unsold side, then what's going to happen to the demand for the resale? Okay, so that's why you've been seeing resale going up for the past few quarters, which is not surprising. But how long is this going to last? I think that is something that you have to be a little bit more wary and concerned about. Let's just acknowledge that yes, property prices are not unlikely going to be coming down, crashing. But will it stagnate eventually? Depends on how much the government wants to control the market, because ultimately our movement over here is generally determined by our government. Okay, so some of the factors mentioned, or rather which is in fact actually affecting the market, is that there is strong housing demand. No matter how much people are complaining on the streets, there are always people still be able to afford because of higher income and also generally higher housing net worth. And then the other thing is high land costs, both from the GLC, the government side, and also some of the block side, because you have the resale market, being this hot. And then if you want to convince owners to go on block, definitely you're going to give them a higher price. But if not, why would they want to let go at lower cost and let you earn the profit? Because most of them are probably not stupid. Even if maybe some of them are, then maybe some of their friends and relative or agent may be advising, hey, why you want to sell cheap? So it's very unlikely, as long as there's buyer, people will end up selling cheap, even though they may not be very good at the understanding of the market. Okay, so because of all these causes, especially also construction causes, all these prices are going to remain elevated in the 2023 next year. Current level lowest ever is last time is 4,000 plus, 2007. Then now it's been lower since that era. I think we are somewhere around like 5,000 plus. Okay, I can't remember which part it got, but we will touch on that later. And all these are excluding the ECs, so we are not looking at the ECs. And when there's a weak buying, this part is a little bit more interesting. When there's a weak home buying demand, then you have a high level of unsold units, such as the Asian financial crisis of 1998, then you will have obviously a downward pressure, because ultimately we can say all these factors blah 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 blah, but at the end of the day, it's always a simple economics. Supply demand, you got high supply but the weaker demand, then naturally your price will drop. If it's the other way around, lower supply, high demand, then prices naturally are going to increase. So this is what is mentioned over here. I think those people who have taken basic economics, and you don't even need basic economics, come on, you just need common sense to know that this is how the market works. Like even you go and buy bread, if the guy says, oh, this piece of bread is going to be $2, but you got 10 people fighting for it, can you sell it at $5? You may not want the bread that much, but there will be people who will want that bread, maybe even $5 to $10. So basic understanding of the market is very important. Okay, during that period of time previously, the unsold supply fell from this amount to this amount. And then in the meantime, property market went up 39%. Last time there weren't any cooling measures lah. Maybe we have lah, but very, very little lah compared to now. Now we have so many things. We have your SSD, LTV, first of all, bias SD, bias stamp duty is not really a cooling measure lah, but it still costs. And then on top of that, you've still got also ABSD, and then you got TDSR. So all these kind of things factor in, comes into play. And then you've got all these restriction, MOP and all these things that may not be directly in the private market, but it also affects the private market. Why? Because when you got MOP, then people who want to upgrade, they are still stuck. They cannot upgrade. And in the way it affects the private market. Okay. But other countries, you may not have this kind of things. Later we'll touch a little bit on New Zealand. Okay, and then from after the COVID period, you went up by 23.1% in about more than 2 years, just slightly more than 2 years. Now, just now we are talking about 4,000 plus units. Then now we are facing about 5,000 plus units, which is considerably a lot lesser. Okay, and next point we want to talk about is that the take-up ratio has been exceeding the amount that the developers were launching, and that's why the number of stock has been dwindling. It has been going down, because the demand has been exceeding the supply, and people are buying new unsold supply, not just because it's new, and because of a variety of reasons. Some may just want new, some may want the investment potential, and some may want to, it's part of their investment strategy, whether is it a progressive payment, it's going to help to defray the high interest costs, these kind of things. So it's people are buying for a variety of reasons. Whereas for resale buyers, at this market, especially if they want to buy for a bargain, I think it's more unlikely unless they are misinformed, which is very often the case. If not, then they really, really want a house right now. So for them, they prefer instant gratification instead of delay gratification, and which is also very common in a lot of buyers lah, because they say, they want appreciation potential, but once they think about, I need to move, I need this and that, so they rather pay for the convenience and they get what they want right now. It's like, example, why are so many people going for Grab food even though it's expensive? Because people are willing to pay for convenience, ma. So why are people willing to pay so much for COE? Because they want to have their convenience, have their own car, versus having to wait for public transport. Also a variety of reasons lah. Okay, and then within these 18 months, the quarterly take-up rate range from 100+% to almost 300%. That means the launch rate is almost like 1/3 of the take-up rate, which is quite scary, because that will result in a much faster decline of available stocks. And that actually puts that will actually put the ball back to the court of developers. That time during the COVID period, developers were worrying, and that's why they were trying to some of them drop prices to get buyers to commit to their units, but now it's been a totally different thing because of low supply, and a lot of them are not in a rush to sell. They are able to hold their prices and even increase the price. We recently seen quite a few increasing prices despite the so-called gloomy economic sentiment, then the rising interest rate there, here and there, but they're still increasing price. So why? If you do not understand the market, then definitely you may be thinking, this one is a speculative bubble, things are going to come down. Then you realize you've been waiting and waiting and waiting, similar to what those people who fail to understand the 2017, 2018 market, then they'll be waiting and waiting, and as such, they realize that quite a lot of them, even till now, they're still sitting around, waiting for their opportunities, and probably away until their retirement years, they're still waiting and then regretting. But too bad, the fortune favors the bold. I think we all know that. So despite two rounds of cooling measures in the past 12 months, prices have not dropped. Usually, you throw in the cooling measure, you have a knee-jerk reaction. But it doesn't seem to be the case. Yes, maybe the immediate aftermath will be the market is a little bit tame. But these two cooling measures recently, you still see the PPI still moving. considerably much higher compared to maybe the 2018 period, where you got TDS, not TDS, ABSD increase, and then the LTV also dropped. And also, because of their, like what I mentioned just now, because of their diminishing supply, they are unlikely to lower the price, especially for those of them who still have, because each of them, they have 5 years to sell. Imagine, like example, water guns, they just launched last year, and they're almost close to selling out. So how much more do they have? They have 2 to 3 years to sell the remaining how many units? So are they in a rush to sell? Do they need to sell higher? Can they hold until the interest rate period starts to come down and then people start getting bullish again? Because a lot of people are saying, I don't want to buy a house now because interest rate are higher. Then wait until I want to buy a house already. Next time I wait until interest rate down already. Because everyone thinks they're smart. That's always the problem in the market. The same goes for the stock market. Everyone thinks they're damn smart. Everyone thinks that they're above average or even expert level when they know a little bit. So they think very simply because of interest rate is going down next time, and that's why I wait for interest rate to go down. Then I think that will become a better deal for me. But if everyone thinks that way, won't that drive the demand then? And what happens to the price? So imagine today you are paying maybe $2,000 more. Okay, for 2 years, that is maybe about 48K. But if you're talking about maybe a $1.5 million property, maybe it would have went up to 1.6 million. It looks to you a 0.1, which is not too significant, but because of this, you don't want to pay the $48,000, you rather pay $100,000. This is what a lot of people fail to realize. And this is what I call the short-sightedness of the general public, okay, which is fine because in fact, I would say the savvy investors, people who know how to read the market like myself and some of my clients that I help to monitor, they will easily be able to take advantage of this general phenomenon because everyone thinks that they're smart. Okay, but if you really spend time to sit down and look at the data, you realize it is important for you to not be too easily carried away by what the market, what the average crowd is saying. So meanwhile, condominium construction costs have increased, but cost of materials have increased. The other thing is the higher interest rate, because after all, you got progressive payment. You say that, I'm not going to pay the interest rate now. So who's actually going to be the one paying the interest rate? Obviously, this guy lah. So are they incentivized to charge you more instead to cover their costs? Right? If you're not the one paying, then somebody has to be the one paying, right? And now the land are not cheap, and they are forced to fight for it. It's not like, you don't go to a unit where you don't have much viewers, then you try to lowball the guy. But developers are constantly fighting because once this piece of land comes out, URA published on the website, the whole developers of the whole Singapore know. Okay, whereas maybe for you, your agent may not market the unit as much. So you've seen easily some of the property portal, you realize some of your agents are not even taking care of your interests, not even promoting your listings actively. Then naturally you're not going to get the viewings. I even have one of my clients kind of tell me, hey, this one also I asked him, hey, actually what happened? That one seems to the listing seems to be promoted, but the problem is one or two buyers come in, then the agent, guess what? A few times it happens a few times, the agent will cook us an excuse not to come. So they rather let the seller do the viewing themselves. I think that is a problem because it's not going to favor you in terms of negotiation. And you've got a lot of these kind of irresponsible people lying around in the market, and that's why they are, probably that's why they're not performing. But anyway, back to this year probably we are going to be seeing a lot lesser. I think last year we hit 12,000, so now this year maybe about 1.5 times lesser for total number of units. So but it's still enough to diminish because this year you have a lot lesser supply being launched. And even next year, a lot of people are saying, next year is going to be a lot more supply, and that's why prices are likely going to come down. You need to remember we need to top up this so-called 15-year low. We need to top up this 15-year low before it reaches this level where it becomes like the ball becomes the buyer's favor again. Now it's still in the developer's favor. Okay, and then next year These are the ones supposedly, and I added them, all of them up. They still only contributes only about 7,000 bucks. And in a year which is considered not as bullish, we are already selling this amount. Will this be able to top up for next year or not? Okay, that is something you may want to think about. And out of these projects, is it how many of them are actually able that I would say a safe entry for you? I think one look I can tell that there aren't actually many choices that there is gonna be quite lucrative in terms of investment wise lah. But then again, there's gonna be a lot of sheep that's gonna be slaughtered because they are being misled into some of these, or rather not some of these, most of these developments over here. But we will see. Well, if they don't do their due diligence, then just too bad lah. Okay, then we move on to New Zealand side. You realize last time they pushed within a span of 12 months. This article actually came out even last year only. Within a span of just 12 months, they went up 23%. Okay, that's not even accounting for this year's movement. And the interesting thing is, over there, investors are the biggest property buyers. Down here, ours is homeowners. So naturally, everyone needs a home. Homeowners form the bigger proportion of home buyers over here. But over there is totally different thing. It becomes an investor that is and I mean investor. When we talk about investor, most likely we are talking about people who own multiple properties. They are not like like a home investor, or rather some people call it a home investor. I don't stay in it as an investment. I buy it and then I rent it out. These are what they consider the investors. And 40% of sales actually go to these investors. They are owners of multiple property, and 15,000 of them already bought homes who already own 5 or more properties. Singapore, how many do we have? I don't think there are many people who own like 5 or more properties in Singapore. How are we able to afford? And in a way, it's a good thing, because if everyone is able to do this, then it's going to be very likely going to be worse than the Asian financial crisis previously. So during this same period of time, maybe last time Singapore only end of 2020. So imagine end of 2020 during that same period, 12 months period, we only move up this amount. But 23% is akin to us after COVID lockdown to here to where we are the last quarter. It's 23%. But within this amount that we appreciated after all these hoo-ha, all these so-called talks of property boom market here and there, they achieved this within this period of time for New Zealand. So you can see the difference in our market and their market. And that's why you are seeing, if you just go to the chart, I don't have the chart with me right now if I'm not wrong. If you just go and Google New Zealand's housing index, you realize that the market really started to crash. But for us, we are still on uptrend. Okay, but let me disclaimer, I'm not saying that it's going to remain at this stage, at this rate for the next few quarters. It's likely either going to go slightly up, or it's likely going to go stagnant. But it's very unlikely it's going to crash. Even if it does move down, maybe it just inches down. So if it just inches down, or rather stagnate, then I really don't understand why people are actually waiting for that crash, because ultimately you're just dragging your own, and then you wait for the crowd to come in again, then you're just gonna, it's like, it's like these people they went in, the market went out already, so I'm not gonna be getting in. So the market go out already, and then they realize, they stagnate already, now mind it's gonna crash. Then guess what? This guy is up again. Yeah, now stagnate a little bit again. Okay, maybe it's time to crash already. Guess not. It's going up again. And this is what the government's plan is. It is not meant to crash the market. It's not meant to do this. It's meant to actually stagnate the market. And this was the intended effect, you realize. Okay, this was the intended effect. It was never intended to be like this. So we need to understand the intention of the government if you want to thrive in this market. So the other thing is the impact of the cooling measures. You realize last time, over the 10 years ago, they made a few adjustments in the ABSDs. Okay, as part of the cooling measures. The last time foreigners, they pay 10% first, then became 15%. Then it became 20%. Then it became most recently 30%. Okay. As for Singaporeans buying their second property only, 7% up to 12%, then up to 17% right now. Who will actually pay for 17%? There are people who pay lah, but to me, why are you investing in property and paying 70% upfront first? It doesn't actually make sense to me. If your agent is telling you that it really does make sense, then I think you need to seek second opinion. Okay. I why why are people paying 70% as a Singaporean? I really don't understand. Okay. I mean, your money could have been put to better use somewhere. And rental yield, yes, it may be high right now, but how many years do you need to cover net to cover 17%? There are easily many more instruments or rather many other entry opportunities, even in this real estate market, to cover that. Why are you paying that? So well, as usual, misinformation everywhere, and then going to a wrong consultant is the problem lah. So previously 2013, ABSD was more than buyer's stamp duty. Buyer's stamp duty is something that everyone cannot run from, but ABSD was more than that. Then same thing, 2014 also more, 2015 lesser already, still more, 2016 still more, 2017 just slightly above. Then 2018 onwards, when they increased the buyer, at least ABSD started being lesser. Okay, 2019 a little bit more. Partially also because of the higher. It's not really high. I don't think it's the transaction count. Okay, you see previously, it was like this. Then now you only have like COVID period, 5,000 of them paying. Then now it's a little bit more lah. Maybe you have got foreigners, PR, this kind of thing buying. But compared to 10 years ago, even till now, ABSD is still quite considerably lower than additional buyer's stamp duty. And you may be thinking, hey, still a lot of people paying, but actually not really, because if you need to factor in buyer's stamp duty is either below 3 million, below 1 million is like 3% and something minus 5400, and then above that is minus 15400. But the problem is once you have an ABSD comes in, even for Singaporean, it's 70% straight. How many of these to counter this? This is like times 4. And then if you have a foreigner, 30%, this is like times what? 7.5. 7.5 times. So how easy is it for ABSD to catch up to buyer's stamp duty? Okay, so that's why you can see the amount of people paying ABSD is considerably a lot lesser, and which also means that there's a lot lesser investors, not say investor, a lot lesser multiple property investors in the Singapore market than overseas, such as New Zealand, and this actually contributes to the strength of the to the stability of the real estate market here in Singapore. Okay, that's something for you guys for this week. So any other inquiries, please feel free to text me, and I'll see how I can help. Okay, especially those of you who are waiting to look at some of the launches next year. Please be wary. Please be very clear what kind of properties are going to help you make money and which kind of property is not going to help you make money. I think property is seriously too big a ticket of item for you to be jumping in just because of the market FOMO. So many people especially during the show flat launch, people are flooding in. So developers they understand buyer behavior, but people are flooding in. And I always wonder how people like to flock to where the crowd is. I mean, I was never a crowd chaser, so I can never understand their behavior. I prefer to sit and observe why people are doing this and that, and perhaps that actually can be a lot safer than most people. But I really marvel at how people chong in and follow a crowd and go and just buy blindly. And then I've got quite a lot of people coming telling me, "Hey, I actually bought this. I'm not saying accidentally. I feel like I bought this already, but I regret." Because I feel that I bought this at an overpriced because that day, during during the launch queue, wow, it was so pressurizing. Wow, people are like telling me, or my agent is telling me, I must buy, I must buy. So why are you succumbing, putting yourself in that situation? It's like you don't want to get slaughtered, but you want to put yourself in a lion's cage. And that is what they're doing. They're trying to put you in a lion's cage. And then you're telling me you don't want to get slaughtered, but you yourself willingly walk into a lion's cage. So before you walk into a lion's cage, make sure is it a right kind of cage that you want to walk in. You're gonna be walking into a lion cub's cage, or you want to walk into a real full-grown lion. So you have got to pick your battles lah. You don't just go and walk in just because other people walk in, and then guess what? I also hear of people who walk in to a show for first time and guess what? They come out with an OTP straight away. So that is something that I really cannot understand. But it still happens. It's because you have all kinds of people in the world. So please be safe, be careful, especially if it involves a large majority of family assets. Then I think it is important that you as a decision maker will have to find out all the right knowledge before you make a move. Okay, that is all we have for today. And see you guys. Bye bye.